Good morning, good afternoon, and good evening. Welcome to the HODLNOTS weekly warm-up. I'm John,
I'm Vicky.
and let's get into some of the crypto headlines making headlines over the last few days here in the 32nd episode of the weekly warm-up.
And this first one is actually a bit of a summary from last year up till now. And it is definitely a lesson in trade what you see. So, because Bitcoin has 5 straight months of losses. So, the positive start to 2026 was quickly erased, and Bitcoin began to lose value rapidly, reaching a new local low of 60,000 in early February. So, although it recovered some ground since those 15-month lows, it still ended the month in the red with a painful double-digit decline. This has made it 5 in a row. So, it was almost impossible to imagine the current situation in early October last year. At the time, Bitcoin's price was riding high, charting fresh peaks at over 126,000, and everyone was anticipating even more records during the so-called October. So the reality, though, was far different. So on 10 October, the cryptocurrency market experienced its worst single-day liquidation event, with more than 19 billion wrecked as prices tumbled. As many analysts claimed, after that pivotal day, something in the market structure broke and it was never the same. So Bitcoin started to chart frequent losses and dumped to a 5-digit price territory by the end of the year, and it ended 2025 in the red, making it the first post-halving year to do so. So January began on the right foot, though, but the rejection of 98,000 resulted in another nosedive, and thus January saw losses of 10%. Another massive crash occurred in early February, pushing Bitcoin south to its lowest level since October 2024 at 60,000. So although it rebounded to finish February around 65 to 66,000, it still ended the month with a 15% decline. This made it the fifth consecutive month, as I mentioned before, in the red for the first time since 2018. So if that is not a lesson in trade what you see, I don't know what is.
Absolutely. We'll be looking a little bit later at Bitcoin for the week, but there have been some geopolitical events over the last few days that have been shaking up various markets. Let's speak about that now. Bitcoin has outperformed equities, however, as the Asian markets as well have reeled from the Iran strikes. Now, Asian markets plunged at opening today as the fallout from the US and Israeli military strikes on Iran sent oil surging, stocks tumbling, and investors scrambling for safe havens. But Bitcoin has held up better than expected, trading between 66,500 after the weekend, swinging between 63 and 68,000. Now, Japan's Nikkei plunged as much as 2.15% at the open, shedding over 1,260 points. Now, by midday, it had pared the drop down to 1.66%, trading at 57,875 for the Japanese Nikkei. Now, Hong Kong's Hang Seng fell also quite largely by 2.54%, and Singapore's Straits Times fell by 2.13%. Shanghai held up better, dipping only 0.45%. Now, also airline stocks across the region, everything from Qantas, Singapore Airlines, and Japan Airlines among them, have also fallen 5% as the Hormuz closure, that's the Strait of Hormuz, disrupted flight routes and sent fuel costs soaring. Chinese airlines were also hit hard. Now, that initial oil spike, well, that initial surge has faded sharply through the session, and Brent crude oil has jumped as much as 13% at the open of trading. All right, but in terms of the US equity index, futures also have recovered, with the S&P 500 down 0.67% and the Dow Jones off down by 0.71%, well off earlier lows of over 1%. Now, gold has risen by 1.76%. Overall, despite some of those major losses with Japan's Nikkei Hong Kong's Hang Seng all falling above 2.2%. Bitcoin was only down 2.2% on the day, outperforming the steep losses in equity futures and the Asian stock market benchmark. So we're not going to get into the political side of those strikes at least, but we are going to be looking at, as just mentioned, the kind of fallout that happens between the traditional or TradFi markets and Bitcoin as well. But to our point, we trade what we see, and we'll see that there is plenty of potential despite the turmoil. Back over to you.
And another person who's not going to be trading what he sees for a while is the CEO of Goliath Ventures, because he was arrested for a $328 million Ponzi scheme. So we talked about a different one a couple of weeks ago, and there's a new one now. So the DOJ, which is the United States Department of Justice, has arrested Christopher Alexander Delgado, the 34-year-old executive of the purported venture capital firm Goliath Ventures, for allegedly perpetrating a crypto Ponzi scheme that defrauded investors of roughly 328 million US dollars. So, according to a press release from the U.S. Attorney's Office in the Middle District of Florida, Delgado was the president and CEO of Goliath Ventures, formerly called Gen Z Venture Firm. The complaint filed against Delgado accused him of wire fraud and money laundering. The former CEO ran the scheme from January 2023 through January 2026, claiming to invest victims' funds in liquidity pools. So Delgado promised investors monthly returns while soliciting substantial investments. His victims came from charitable sponsorships, luxury events, professional marketing materials, and personal referrals. To make the scheme appear legitimate, the former Goliath president made some monthly payments to investors as purported returns. So while claiming to invest victims' funds in crypto protocols, Delgado ran Goliath as a classic Ponzi scheme. He used the funds contributed by new investors to pay existing clients, a method that enabled him to garner over 328 million from victims. Besides returning capital to those who requested it, Goliath also used victims' funds to host lavish business gatherings, holiday parties, and to pay for luxury travel accommodations. While Delgado awaits trial in the U.S. The U.S. government has asked Goliath victims to reach out for appropriate proceedings under the Crimes Victim Rights Act. So he learned nothing from the previous one because that one was actually quite a few years ago. So I'm glad they arrested him. We'll see if the victims can get any money back, though.
Absolutely. Let's head over to a good news story. Well, specifically to those in the States and talking about money out. It's a form of payments. MasterCard and MetaMask have launched a US crypto card debuting in New York. So, self-custodial cryptocurrency wallet MetaMask is rolling out its MasterCard-enabled spending card in the US for the first time availability in New York. MetaMask parent company Consensus on Thursday last week announced the general availability of the MetaMask card across the US following initial pilots in 2024 and 2025. Finally, with the US launch, MetaMask card joins existing availability in Argentina, Brazil, Canada, the European Economic Area countries, Mexico, Switzerland, and the UK, with additional markets to follow, the company said in an announcement last week. Now, this is the first time MetaMask is available across 49 of the states, and the first time users in New York can access it. Now, MetaMask, according to Consensus, the parent company as well, saying that Vermont being the only exception, they say MetaMask shares our vision of, and this is from obviously now MasterCard, MetaMask shares our vision of empowering people to spend their crypto securely and seamlessly anywhere MasterCard is accepted in the world. This according to Sherry Haymond, Global Head of Digital Commercialization at MasterCard. Now, just for those of you interested, initially, the MetaMask card is issued as a virtual card you would find in your wallet on your phone, while the MetaMask Metal card provides a physical card linked to the digital wallet. Now, if that sounds pretty exciting, there is one downside to it, and that it costs $199 per year. And you can as a bonus, get 3% cash back on the first $10,000 spent each year, with no foreign transactions fees and higher spending and ATM withdrawal limits as well. So, if you are already in some of those countries mentioned, besides the US, where it's now rolling out, we'd love to hear from you guys as well at some point as to whether or not you are using that MetaMask virtual card. But we'll see what happens. Back to you.
That sounds like a great card, actually. I've heard of some cards about 5% fee. So I think, oh, actually, that isn't a fee, that's cashback, no cashback and 5% fee. So I think this is
Mm.
actually not a bad card. Anyway, Ripple. So XRP has been in the news and it's in the news again, this time actually for a good news story, as it's actually pushing banks to act as the Clarity Act could reshape crypto rules. So we've been talking about the Clarity Act for a while. They are in the news trying to push it through. So a significant regulatory transformation is unfolding in the United States as Ripple accelerates discussions with banks and policymakers. The proposed Clarity Act could redefine how digital assets are classified and supervised, potentially reshaping the structure of the crypto industry. So Brad Garlinghouse, who is the CEO of Ripple, has urged financial institutions to engage constructively and move quickly during ongoing Clarity Act negotiations. He emphasized that discussions remain active and highlighted meaningful progress so far. Major industry organizations, including the American Bankers Association, are participating in the talks, signaling serious institutional involvement. Lawmakers also want to finalize the framework soon, increasing pressure on both crypto firms and banks to align on key provisions. So, just as a reminder, the Clarity Act proposes a structural shift in crypto oversight. It would classify most digital assets as commodities rather than securities, significantly reducing the role of US Securities and Exchange Commission and expanding authority for the Commodity Futures Trading Commission. So basically, making a bit of the laws more clear and moving its oversight from one body to another. So we've been talking about the Clarity Act for months now. So hopefully they can pass it and everyone's happy about it soon.
Absolutely. Well, if Ripple's leading the charge, it'll be interesting to see what unfolds going forward. Now, let's head on over to the other side of the world again because it's going from bad to worse. South Korea. If you guys have been following our stories of the last couple of weeks, if not months, South Korea's done it again. Now, South Korea's tax office now has leaked a wallet seed or seed phrase and has lost $4.8 million in seized tokens. So South Korea's National Tax Service accidentally exposed a crypto wallet seed phrase in an official press release on Thursday, leading to a loss of 4 million PRTG, otherwise known as pre-Retigium tokens. You might have seen this on TradingView at some point, worth about $4.8 million from that address, according to local media reports. Now, according to these media reports, the press release related to the National Tax Services enforcement campaign against tax delinquents and seizures that the authorities are carried out, included an image of a ledger cold wallet and a sheet of paper showing the wallet's full mnemonic phrase without any blurring or masking. I've seen the picture. You can clearly see all of the words. Now, Associate Professor at Hang Sung's University, this is Jae Woo Cho, at the Research Center for Blockchain, who analyzed the flow, said that he hoped the episode would be a blessing in disguise that pushed Korean public bodies to build proper virtual asset custody systems. So we spoke about it last week about in Gangnam. We have spoken about cold wallets being stolen or misplaced, and now we've got even the National Tax Service in South Korea. Whew, if only, yeah. Luckily, they're not in North Korea, but yeah, in other words, heads would roll. But for now, yeah, we'll probably have a story next week again on South Korea. But let's head on over to some social media. Hey, Vicky?
Yeah, and we said it last week and we said it the week before and the week. If there's any South Korean members out there, please let us know because we really need to teach them and train them how to handle their crypto at Bitcoin Trading Forecast. So anyway, this is an interesting one. Twitter has lifted its crypto ad ban, but it has strings attached. So, in a major policy shift, X has removed cryptocurrency and gambling from its prohibited industries list for paid promotions, opening the door for influencers and calls influencers to legally monetize crypto content on the platform. So, the change marks a significant reversal of a ban that has been in place since June 2024. So the entire financial products category, including loans, investment services, and crypto, was removed from X's advertising policies. But gambling was also removed from the list, while other industries replaced them. So these industries were pharmaceutical, tobacco, weapons, and weight loss were actually put on the list. So a major turnaround for X for cryptocurrency. So we probably sorry about that. We're going to be bombarded with crypto ads now on X. So which is actually good for us, but we'll see how we go with that.
Absolutely. And we'll follow up on that as well. I mean, we're in the UK and the EU as well. There are some slight amendments to that as well. But let's head on down under. And we've spoken about self-managed super funds in the past, but let's talk about the general crypto space in Australia. And our Australian crypto execs are upbeat on the progress within the country despite lingering issues. Now, Australia's crypto market is making progress in user growth and regulatory reforms, but there are still a range of issues to iron out in the sector. This is according to crypto executives in the industry. Now, on the sidelines of the XRP Australia 2026 event that happened in Sydney on Friday, Coinbase APAC Managing Director John Lachlan said the country has seen positive regulatory momentum and growing expertise among those tasked with policing the industry. Now, multiple arms of government, mainly Treasury, who are writing the draft regulations, and ASIC have thoroughly upskilled their teams and have pretty deep digital asset domain expertise internally. So I think it's pretty positive movement, according to John. Now, self-managed super funds are becoming a vehicle for Australians to invest in digital assets as traders are searching for ways to diversify their holdings. Now, OKX, the exchange, the Australian CEO, Kate Cooper, noted that a significant area of growth for the exchange has come from the sophisticated traders and also self-managed super fund trustees and high net worth individuals. At the same time, she said across the industry, there are a growing number of new self-managing super funds that are being set up specifically so trustees can invest in digital assets because they currently can't invest via the big super funds. Well, we know a couple that can. Now, self-managed super funds are retirement funds that are set up and managed by individuals rather than conventional funds managed by a large institution on behalf of others. As you would see globally, Australia's got something slightly different. Now, in a yet to be released OKX, the exchange report on self-managed super funds, Cooper said that many respondents were interested in digital assets to diversify their holdings. Now, not only South Koreans, but if you know of any Australians, well, had to send them over because obviously they're looking to expose themselves more to some of the digital assets, not just traditional finance as well and other options. So good news, things are growing. Things in terms of regulatory frameworks are definitely shaping up. Up to you.
And as you just said, we're in all seriousness, we do, if there are any Australians on the calls or Australians watching this call afterwards, we do know quite a great self-managed super fund executive who owns their own company and was at Sydney, and we've met them before. We've done a little bit of a thing with them. So please contact John or I, or create a support ticket in Bitcoin Trending Forecast, and we can actually hook you up because it is the way of the future, self-managed super funds. So just a little bit of a plug. Sponsored by, no,
Yeah.
kidding. So, in other news, this is actually good news as well coming up from the US. So, lawmakers are moving to shield crypto developers from federal prosecution. So, a new bipartisan bill introduced into the House of Representatives aims to protect American blockchain software developers from criminal prosecution. The Promoting Innovation in Blockchain Development Act was jointly introduced on Thursday by Republican Representative Scott Fitzgerald and Ben Cline, together with Democratic Zoe Lofgren. So Congressman Ben Cline, who represents Virginia, tweeted that the bill restores needed clarity by protecting developers who don't control customer funds while ensuring law enforcement can continue to target real criminals. He said for too long, federal overreach has blurred the lines between bad actors and the innovators building next generation technology. So the bill specifies that coders who don't take custody or control of customer money are not subject to prosecution under Title 18 U.S. Code 1960, which makes it a federal crime to operate an unlicensed money transmitting business. So great news that they are actually understanding crypto a little better and differentiating between the people that are trying to do it legally and illegally. So good news coming out of the US.
Absolutely. And again, as we're starting to see these regulatory and legal frameworks being developed in the US and in other countries, they're starting to be picked up by other countries as well. And hopefully, with this new age of digital assets, we've been around for a little while. Things are starting to shape up. Now, speaking about illicit activities and illegal things, it's time for that segment of the weekly warm up. And let's talk about well, all kinds of wrench attacks, and we've spoken about evil twin networks. But ransomware, you guys all know malware. You've probably heard of ransomware. These attacks are surging up so far, 50%. And but ransom payments are on the decline. Now, a new chain analysis report suggests that ransomware attackers are working harder for diminishing returns, as regulatory pressures and refusals to pay have hurt ransom proceeds. Now, the number of ransomware attacks rose 50% last year as hackers shifted their focus from large-scale attacks to small and medium-sized targets, according to blockchain analytics firm Chainalysis. Now, in an annual report published on Wednesday last week, Chainalysis said that there were nearly 8,000 total leak events in 2025, a 50% increase from 2024. However, total on-chain ransom payments amounted to about 820 million, marking an 8% decrease from 2024. We're seeing a structural shift in targeting, fewer large headline-grabbing intrusions, and more volume focused on small and medium enterprises. The assumption is simple: smaller victims pay faster. So, this was just as a reminder, ladies and gents, be careful with whom you share your seed phrase. Be careful on links that you click. Make sure that not only the first four or five and the last four or five digits of wallet addresses, it's, check the entire wallet address that you're sending money to. All of these things, this is why we include it every week, stays forefront in your mind as you are interacting in the digital space. Never share your seed phrases, etc. And definitely don't publish it in a photo South Korea National Tax Service, but be very careful around that. There's still things such as ransomware and other things that are potentially out there. We may be small, very, very small, but still, there is still potential. So again, not your keys, not your crypto. Now, this kind of ties up with the normal headlines. And normally we would do fear and greed index, and we are again, but with another news story around that. Vicky, tell us more.
Yeah, with the geopolitical tensions in the world at the moment, the fear and greed index is interestingly actually at 10, which is still extreme fear, but it is up from last week's 5. So crypto really had a turbulent weekend, which began on Saturday when the US-Israeli strike hit targets across Iran, killing Supreme Leader Ayatollah Khamenei. So excuse me. Bitcoin dropped to below 64,000, and within hours, the total crypto market shed about $128 billion in value, with forced liquidations cascading across derivatives markets. So luckily, or interestingly, a bounce came quite quickly after the Iranian state media confirmed his death, and traders pushed Bitcoin back to above 68,000. But the optimism faded as Iran launched retaliatory missile drone strikes against the Gulf states, hitting targets in Israel, the EAU, and Bahrain. So that dragged the price back below to 66,000-ish by Sunday evening in New York. So by today, as we heard, Bitcoin was trading at around 66,500-ish within a 24-hour range of 65 to 68. And the 24-hour trading volume was about $43 billion, reflecting heightened activity as traders repositioned ahead of the US market opened. So as I mentioned, the US stock market is actually just about to open in the US. So we may need to see how those affects crypto once they open. But Bitcoin is holding steady just under the 21 EMA for the past actually week. So John's going to actually look at that chart now and we'll see what it's doing.
Absolutely. So here you can see over the weekend, the last 2 days, and we blow that up a little for you all. There was a little bit of volatility, but we've seen far worse. And this is where we were saying that even though Bitcoin did drop down a smidge around 65,000 yesterday, we saw it opening up around that value of 65,000, 700, 800, depending on the exchange. But this is what we've been talking about when we spoke about last week, Monday. We were talking about it needing to hold around the 66, 65. It broke down below, but luckily straight down to some previous support. And this is all compliments of the HODLNOTS indicator, showing some good support zones there as well. But that said, according to Vicky as well, it's still trading below the daily 21 moving average over there. And unless it breaks above, unless we're going to start to see that psychological value of 70,000 broken and close above, we're going to expect some more turmoil this week as well. And obviously, there's still political reelings from the geopolitical events happening over in around the Gulf, etc. So again, we're going to trade what we see, correct? So we're hoping that Bitcoin can eventually rally up around there this week, hopefully. That said, if we do break down below this, we do worry that we're going to start to revisit some of the previous levels further down here. 60,000, we know happened back here in the beginning of Feb. We're now in March. Hopefully, we can march upwards and not down the hill. That said, as well, if you're using or you have access to the HODL Fire indicator, currently waiting for another potential buy opportunity. But again, there's a lot that's got to get past. You can start to see, the 70,000 value. I'm talking to specifically the HODL Fire graduates at the moment. We've got a couple of areas of resistance. So for the moment, it's all going well. Like, yeah, let's get up to like 78 and break past that in 80,000 and 100,000, which is now sitting up here. Okay. But for the moment, we've got a lot to deal with. All right. There's a lot of resistance along the way. And we're not just talking for Bitcoin, we're talking about the Ethereums and everything else. But there is plenty of opportunity. If you look at some of the altcoins and some of our HODLify graduates of the weekend have been trading beautifully with some coins on both Binance and Mexi. But let's talk more about that in what's happening in the HODLNOT space for the rest of the week.
Yeah, and that space is the lodge and the den. So this week is fairly normal. We have our self-paced call today at 12 p.m. UTC. So those are for people who are on chapters 1 to 3. You can join there and ask any questions that you'd like. And then tomorrow is normally the busy day, and it is as well tomorrow. So we have at 4 a.m. UTC another self-paced call where if you are in any chapter or module, you can jump on there and ask questions as well. And that is followed at 6 a.m. UTC by the call that Wendy does in the lodge. And this week she'll have another topic. So those are always great. If you can't join them live, they are recorded and they're put into the Certified Academy, which our HODLNOTS can access if you have a den membership. So that will be followed by another HODL Fire call, which is I have the wrong week. Hold on. So that will be followed by the free HODL Fire call, which goes when you have a HODL Fire subscription. So if you have a HODL Fire subscription, you can jump on this call on Tuesday at 12 p.m. UTC and get a little insight as to what coins may be running there. So that's for anyone that has a HODL Fire subscription, jump on there. And then that is followed by a call on Wednesday, which is our HODL dot call. So the HODL dot calls are for people that are doing the 3M challenge in our den and lodge. and that is taking $40 and turning it into $2,500, and it is a scalping challenge. So if you are in that challenge, you can jump on that HODL call at 8 p.m. UTC on Wednesday and ask any questions that you might have. And then another HODL call is also on Thursday at 7 a.m. UTC, which is again an opportunity for you to jump on if you missed the other call. And then the week finishes out as usual on Thursday at 12 p.m. UTC for our self-paced course takers who are on chapters 4 onwards. Now, this week is also a HODL Fire course week. So if you haven't done the HODL Fire course and you want to do it, this is the last opportunity if you're a certified HODLNOT to use that coupon. So we did give a discount for certified HODLNOTs, and it is the last opportunity to use that. So that is this week, 4th of March and 6th of March, and they both start at 6 a.m. UTC, and they go for about 5 hours each day. So it is a 2-day course. So that is a lot to do this week. So if you haven't done the HODL Fire course, what's waiting? This is the perfect opportunity to do it because the prices will never be lower.
Absolutely. And just a reminder for those of you looking to do that, definitely certified HODLNOTS, make use of that last opportunity. It is geared towards those in the Eastern Hemisphere, that's the side of the world. However, obviously for South Africans and Europeans, it's plenty easy. It's a very convenient time. But then again, for those of you who are perhaps in the West and you want to wake up at 3 in the morning, grab it, by all means do. But if you have any queries, do let us know. Either drop a support ticket or hello@hodlnots.com, and we'd love to hear from you about any of that. But for the rest of it, ladies and gents, lots happening in this week. Trade what you see, trade carefully. And I think what is, considering the little thing up over here, what is the thought for the week?
Yes. So with all that happening in the world, we thought we would do this little hat over here and make it a little bit more upbeat. There we go. But also really do the only thing we can do and take a page out of 2 days from now. So it's a little bit of a cryptic clue. But 2 days from now, so in the style of the birthday boy, which is the hat. I don't know if anyone knows who that is, but you might after I say this. So oh, march on forth, don't drag or delay, step with a skip and be on your way. Or, in other words, just march forth. That's all we can do. March forth.
March 4th, March onwards. You want to have those puns in play, all good. But do so carefully. Please make sure that your security is up to scratch with around your crypto holdings when you're trading. But as well, when you're trading, make sure that you're entering good, safe trades. Do the research on the higher time frames. And we will see you guys sometime this week on one of the calls. If not, next week, Monday, for the 33rd version of this. Until then, thanks for joining. Bye bye.